Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting the lab today. I stream live Monday through Friday, 11:30 to 1 p. Eastern Standard Time, and this stream's about integrating Bookmap OrderFlow tools with auction market theory using the volume profile as a chassis in the intraday developing time frame. It's based on structured trades, and these trades are available to all of you in the Bookmap Discord chat in the TraderLab. The TraderLab is a community of like-minded traders who come together to leverage their collective experience. This stream's about the business of trading. It's about potentially creating sustainability and understanding the environment you're operating in, the typical impediments to sustainability, and how you might be able to develop not only the business, but an understanding of the environment you're operating in, and also learn a lot about yourself. The self is a combination not only of your life experience, but also your primal wiring. And most of us are not conscious of primal wiring, and we bring our outside world experience to this environment and try to get the environment to fit to what we believe it is. But the possibility exists, and this is just something for you to consider, that you're trying to solve for something that is not in alignment with the environment. So if you keep working hard and potentially using a mix of random inputs or random indicators and whatever, you might find that in spite of winning trades, which anyone can have, even if you're using a random buy-sell generator with no concept of anything, and every indicator in every toolbox does have winning trades as well as nothing, you might find that you do not have an edge in that you're trying to repair something or fix something that actually is not the solution, but actually part of the problem. Now, I'm not saying that's your situation, but I will suggest it's most retail traders' situation. And as we know, the ability for retail traders to create sustainability and the failure rate being what it is, there might be some common behaviors that create that. That's the purpose of the TraderLab. Not a one-size-fits-all. It may not be the solution for you, and of course, past performance is not indicative of future results, and you guys know that, right? So let's get into it. We have a lot to talk about today. General disclosure, all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure. Trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember, this is not a trade calling room, but if we get into real time, we'll discuss it. Also, this is based on structured trades that are available to all of you, as well as a library of webinars, so you can kind of see a consistent process applied in a random environment. This is a gaming environment. It's not a video game. It is a probabilistic business. So if you understand how casinos operate, they only play games with an edge. They do pay to gamblers. The gamblers have random winnings, and so do the casinos, with the difference being that they only play games with an edge that favors them. So over a random distribution of outcomes, the casinos extract the dollars from the gamblers, and of course they can still afford to give you the cocktails, the tickets to the buffet, and still pay the gamblers. That must suggest something, doesn't it? So are you looking to create confirmation, certainty, or are you more interested in understanding the business where there is no certainty and you need to solve for 100% uncertainty? And that pushes against your primal wiring. If you're not aware of these elements, and if you can't control yourself, you need to come to TraderLab on your journey so you can learn about the common elements we all face, because we've all walked in your shoes. It's just a matter of, will the light bulb go off because you keep doing a process that might not have an edge and is very typical of individual traders who are looking for certainty in an environment where it doesn't exist. Just something to think about. Now I'm going to look, let's take a look at the higher time frame. I think we know what is going on here, but I want to talk a little bit about yesterday's behavior. So this is prior to RTH open. Now, you know, we're already up here. We're making a new all-time high, RTH all-time high, and we have an ETH all-time high above us, which is not the concern at the moment. So some of the key elements in here are what happened down here. And that's what I want to start with. This is the retail price from this down day. And that yellow line is the retail price. The market opens, tests it, and then we take out this high and this high. And our target up here is the high volume or retail price from here. Now, this is the auction. So very simply, the auction is shopping. You know how to shop? You have the fundamentals of trading. The thing that's challenging for us is this process takes place in all time frames or fractals. And what's a fractal? It's the rotations inside of a RTH, if you will. In fact, depending how you look at this is a fractal. It's all a matter of function of quote time frame. This is an outside edge. This is an outside edge. So too high, too low. We had this gap in here. You might remember that. And then we fill the gap. Then we consolidate. This is too low. And we find too high. Then on this day, we gap higher, if I remember right. And this was a target and maybe higher, which I can't remember. And then we come all the way down, take the longs out, but we don't take this low out. And then the shorts, and this is Friday, cover, and the retail price is now here. And if you follow the stream from Friday, which I think I titled it Trader Holy Grail, question mark, how close can you get? And again, there is no Holy Grail. But the structure here suggested potentially longs here, which is what we did, and then taking out this high. So we're trading into fuel. Stops, you know, on the downside, and you notice we haven't taken them yet, then stops down here. So based on the CPI report, and let's look at what we did yesterday. We didn't take this low out. We took out the high, which was a target, and then we came inside. And then it was like, what's going on? And it's not unreasonable before a major report like this morning's CPI that you're going to get longs evening out. And then either the report that does the Acapulco cliff dive, and it can come here, depending where we are, and then below, or we can go the other way. So, and you might call this a bit of a flag, maybe. I don't know. Not me. I don't think in that way, but that's just me. So now we know we have this, and there's another piece that comes into this. And you guys might be aware of this. We had a good CPI report, okay? And the market took off from there. There's a old saying in trading, buy the rumor, sell the fact, or buy the, the report's bullish, you're going to get what's called responsive selling or profit taking on the quote good news. If you're sitting long in the market, you get a big move up or a gap, you might go, this is nice. Let's take some off the table. And then you can potentially get a counter rotation. Also, if you get aggressive buyers on the open, the possibility exists they'll get taken out because they're breakout traders. And breakout traders, anything can happen in trading, but you need to understand market mechanics. Then, of course, it's random. Write that down. It's random. So, and just like the casinos, they don't control the cards that come out of the deck or how gamblers play their cards. That's also random. The only thing we control is having an edge and where it shows up. And then, like everything else, the outcome is random. But if you have an edge, then potentially, if you have that edge, you can execute your trades per vetted plan, and you will take stops like I do and everybody else. Let's get over it. The casinos seem to get over it. Overhead and cost of production. RTH open. Now, this is called the overnight volume point of control. And those of you who follow the stream, you might know what the heck this is all about. This is the highest volume in the ETH. And remember the shopping experience. This is the retail price. This is the price of an S&P. Now, what the market tends to do, and of course it can do anything, is rotate. So if it finds a fair price, it can look for what's unfair. Oh, it's on sale. And then, come back here, go up, or just come here and go, oh, it's too low, and go up, and nobody knows. So again, part of the thrill. I got to turn some levels off just a moment. One moment. I use Investor RT to export levels into Bookmap. It's very convenient, very nice, but it is showing current levels because this is exported off my trading Bookmap. This is not, what you see in the stream is just keep it clean, So these will disappear, and so will the LVMs because they're only for the current market. So let's come to the RTH Open. Now, what I'm going to be discussing here are not necessarily the trades I take, though occasionally I do post them, and it's not trade calling. It's more observe this, observe that, because my objective for starting the TraderLab was to help retail traders differentiate from what you might call fantasy and all the influencers and the nonsense that's out, and anybody can now put anything out there, So it's to kind of help traders sort out and see processes and understand the process of creating a business. And of course, you've got to do the work, and you also have to find what resonates with you. Now, a lot of traders say, well, what about all that? What is this? Well, I don't use indicators. I do use information, but I don't use the typical spaghetti that most retail traders start out with. And by the way, I started out with it because we all start out with the same stuff. What do we know? We don't know. So we do what we think is right, and we start building processes to give us confirmation. If that terminology is in your mind, you already are behind, in my opinion, because it doesn't exist here. The casinos don't operate with certainty. How can you? RTH Open. Now, let's look. I'm going to narrate this for you based on TraderLab process. Now, the thing about TraderLab is that you need to know where you will trade before it shows up. And I'm going to talk a bit about counter trend trading today. Not that anybody should do it, because if you can't trade in alignment with the trend, you have no business counter trend trading. But what you can learn in the counter trend is trade management. So if we think the trend might be up, and based on everything we might consider, yeah, maybe it is, then we're going to first of all look at the RTH Open. We're opening in a gap. It's an internal gap, by the way. Let me just see if I can find it. Yeah. Yesterday's high is here. Something is not quite right here. Some of my levels are off. I'm not sure why. Let me just try something here, just in case. This doesn't look right, so I've got to check this. Should be. Let's see. Not so much. This is a level, and there's going to be stops over here. So this becomes target for longs. I'm just going to put a little something in here so we don't forget about it. Very weird that it's not in here. Maybe I was asleep at the switch. I was working the ETH this morning, so it's just possible. So let's think about the levels. Now, auction market theory is about levels. Now, trading in and of itself is a random experience because of random inputs. So when we are trading these rotations, we're inside of, quote, higher time frames. So let's look at this. We have, now here's the important things. Yesterday's high, which you might think. So what we are doing is we're opening in range slightly out of value. This, I think I lost it again. Where's value? Value area high. So the RTH Open is here. We're opening on top of the ETH volume point of control, the retail price, and the fair or 70% of the volume took place in here. So right now we're out of balance. Out of balance means that we might be rejecting this, and with the news and the acceleration and the overnight volume point of control here, we might just open and, run away. Possible. So for me, I don't rush into this. Now, I'm going to show you something very advanced, and it is not a place, and I repeat this over and over. It's a way to read developing market, not a place to trade for developing traders. I call this a variable high volume node. And all it is before there's volume in here, it's the earliest representation of value. Now, value, what is this thing? When you go to the store, let's think of this like shopping, because this isn't shopping. We're shoppers here. There's a sweep. Right here on the open is a sweep. This suggests counter rotation. Doesn't mean you'd sell it. It doesn't mean anything. We know this is the retail price, and we know because we're opening up here, we can get buyers. All right. We come across. This suggests absorption was here, and now up we go and off to the moon, right? However, what do we know about this? This is the opening swing low. And what else do we know? Let's take a look at something else. Now, and again, this is very fast, opening swing low. Brain is gone again. And opening swing high, we got to label these things. Because where are the sellers? Well, now they're up here, right? So what do I know? There's stops on both sides. That's all I know. I don't know anything else. Not my job. I can't know. So since I know I don't know, remember, I can't predict anything. Now, if you can, come to TraderLab, clue us in. So this is too high. Why do I think it's too high? Because the shoppers in here, right here, this is an auction. Sellers are here. Let me show you. Now, I don't know until hindsight, so let's get over it. No prediction. I see buy stops coming out. I have liquidity here and no clue. And my sellers get below my buyers right here. Now, right here, I'm thinking, okay, counter rotation. And I get VPOC migration. Why does it migrate? Because we just opened and this starts at 0. There's no volume, and then this comes in. This is the retail price. Too high? If I cross above it, it's now too low. And now this is my new retail price. Now, microstructure, not workable, it's narrative. And there's two possibilities. Up, too low, just like here. If it's too low, up. If it's too high, break low, resistance. Who's resisting this? The buyers. And where did we break down? I'm going to draw you a little something just so you can see a fractal and a trigger. Now, when I say a trigger, it doesn't mean get short. It just means what's going on. So let's look at where it changes. In a microstructure, whoops, these are hard for me to draw here. Now, this is the first area of change. And the high volume is right in here. This is a fractal. Very, very micro. Remember, not actionable, informational. So this is mean reversion in a fractal. This is where the sellers were, no clue. The sellers get under the buyers here and here. You see the sellers are here, the buyers are there. Now there's two possibilities. Buyers come forward here, they absorb, and we take this out, or we come back to the micro high volume, which is just like a VPOC. In other words, it's the same as this, except it's in a fractal, lower time frame as you think of it. I don't use time. This is not on the clock. I break low again. What does it tell me? Sellers are here, and the sellers are now selling this counter rotation. If I can't take this out and I break low again, what does it tell me? Too high. What does it tell me? Buyers are here. Buyers are here. There's the icebergs. They're buying. Selling icebergs are up here. Where's my resistance? Microstructure. Now I get VPOC migration. What is this? Too high. What is this? too high. I'm only showing you a trigger. I'm not showing you a short. Just giving you an idea of what this might look like. And again, it's not a short unless, and I'll give you the unless, you are going to be taking shorts to get these guys out. Where's that opening swing low? Here. Now, for me, my plan in this is to be looking for shorts, but I'm anticipating up first for the breakout traders. Where's the stops under here? Opening swing low. So what do I know? I'm going to have an opening swing high here. I'm going to have an opening swing low. Where are the stops for these buyers in this swing? Under here. And then I have this and this. This is the retail price from yesterday. Everything seems to be off just a little bit. So here. So this is the fair price from yesterday. So what's the possibilities? If this is too low, north. If I get under here, or I get a short up higher, I can go get short and come down to here. And possibly, and this is the joy, possibly here. So my targets are back here or north, and both. So let's watch. Opening swing low. So right here, I read a short. Now, for me, and this will be confusing, so I apologize. You need to come to TraderLab if you want to learn about this. The context is up, we're out of balance. So for me, I want to get long. How can I get long? Well, I'm out of value. The market's out of balance. We have, this thing ripped in the ETH. So the only thing I have in here, I have two pieces in here. I can get long if these guys get taken out and I don't get any, and I hold this area, okay? I can get long, and then it would be mean reversion coming back here, here, and the opening swing high, and then targets up above. If I get selling, I can fade it and come back to take everybody out who got long. Now, I'm not saying this is appropriate for anybody. I'm just saying there's the opening swing low, the possibilities. Now, value area high, opening swing low. This is a support area. I can come inside. Let's see what it does. This sets up the first long. Now, where am I trying to go? Where's my stops up here? Opening swing high. So this is a first long. And 20 was an important level, I believe, from the ETH. I can't remember. Let me take a look at your questions, by the way, if you're visiting. How we doing in YouTube, by the way? Is everybody conscious today? You feeling okay? GH, I don't trade Bitcoin, but I will. Bitcoin, you can get Bitcoin data in Bookmap, but you go to bookmap.com. It tells you about connectivity and, the data that you might be able to get for it, but I believe so. So this is the first long. Here's the trigger. Let me show it to you. And here's why. Value area high. Now, what is the probabilities, you're asking, of getting the value area high? This is where our stats come in. So we opened higher inside of range. So there's an 82% probability, just so you know, of taking out the previous high or low. They're getting the previous value area high or low is an 89% probability. Getting the ETH high or low is a 98%-ish probability. Taking out the first hour's high or low is a 98% probability. Individually, getting to the previous value area high, and this is statistics, which you must vet, is a 72% probability. Getting to the previous point of control, wherever it went there, is a 68% probability. So what do I have? I have potentially north, I got south, and this is my first area. And by the way, these are not rigid levels. This is kind of like horseshoes and hand grenades. By the way, we are still in a bullish configuration currently, and I'll have to talk to you guys about that. This is the first long for me, and this is the scale, and then I'm looking to come out the top. So that's a long. And some of these I narrate. And what's the probability? Here, next target. Now, I'm going to have to look back at my trading Bookmap to see where I took trades that are structured. I take other trades that are not. And typically I don't talk about them because you don't need them. You can potentially become a profitable trader if you just vet the trades I've shared. You don't need anything else, in my opinion. So let's look. So this, yesterday's high, so we're kind of motorboating along. And what do we have up here? ETH high is another target. IB high, potentially another target. All-time high, potentially another target, and there's more. So we'll see how this all works. Okay. But I want to show you the structured trades. Now you can learn these. Now the goal of TraderLab is not that you become a whirling dervish. That probably will not be sustainable. The idea of the TraderLab is to help you know where your trades might show up, to understand why, to develop a plan, and also accept the random outcome and learn how to manage your fear. By the way, I am fearful anytime I put a trade on. Why? Well, I am fearful, but I've redefined it. I'm apprehensive. But I'm wired to be, respond that way to uncertainty. That's why most of you, when you're starting this business, are trying to create certainty. But if remember, you're in an environment where there is no certainty. So maybe you're trying to solve for something you can't have, and you're trying to bend the business into something that aligns with your psychology, which is risk aversion. The apex predator behind the rock, the reptilian brain. You're not conscious of it. Consciousness is built on top of primal wiring. Fight and flight, FOMO, all this kind of stuff is always activated under the hood without consciousness. So in trading, we need to become aware of it, understand it, not fight it, understand it. And when it gets generated, you anticipate it. You can't stop it. I spent years trying to stop it, thinking I could will it to go away, that I could post a sticky note that says, don't bail, all the stuff we've all done. No, didn't work, because this element, which is chemical, overwhelms consciousness. So please understand, it is chemical. Now, yesterday's high, outside edge. What do we have here? Well, there's a few possibilities. If we get long at the value area low, we are risk off. And now, what is this? Yesterday's high. Well, it is a potential spot for a continuation trade if it's vetted. Here's the other piece. It's an outside edge. What are outside edges? This is what auction market theory is. Now, the term theory, you'll enjoy it. This is resistance. I'm going to put a little box around it. Now, it looks like support when we get up here, right? So when we come here, 34, so this is an obstacle. So if we're going higher, I need to hold this area. I have the following. Buyers were here, acceleration up. Buyers were here, acceleration. Buyers are here, acceleration. So I'm looking at microstructures. So I'm just going, okay, hey, this is great, having a wonderful time. We have a high 98% probability of either taking the ETH high or low. I'm going for this. What about you? Liquidity comes into the book here. So I got resistance and maybe support. Now, I don't know, part of the joy. Out here is something called a low. Let me show you before we get there, because this is important you understand. This is potential support. I'm finding my buyers here, my buyers here. As far as I'm concerned, right now, looking good, Lewis. Next liquidity is resting at 40. This is pointed out. And then we have 50, which has been sitting up here, 45 and 50, wherever 50, this. So this is targeting. Okay, these are my targets for longs and clueless. Just not ignorant. Why am I clueless? I don't know what's going to happen. Do you? Well, if I know I don't know, then I have nothing to do. Now, right here, what do I know? Let's come back. Yesterday's high, outside edge, outside edge. These are called distributions. If I come outside, and what does it say? Let's look at language. This is the retail price. There's a high volume node. And remember, when you go to the store and you shop, retail is the price where most of the business is done. You know, your mustard, it's $1 a bottle, right? I'm going to just make a little note here of what this is. HVN, high volume node. So it's shopping. Now, the way the market tends to work is, or at least the auction, what is too high and then what's too low? And of course, the joy is, where is it? You know, and this is the maybe part of trading. Maybe it's too high, maybe it's too low, maybe I don't know. But let's look at some order flow phenomena. Right here, I get a buy sweep. And often what we see, and you're going to see this, we get a counter rotation. So when I see a sweep, my teeth chatter. And I know my support is out here at the time because I took it out. Notice what happened here. Same thing, except I broke below it. That's a change. So this is the retail price. This is too high, no clue. This is like support, break low, too high. This is trouble in River City. Now, I have to look over here. If this is the retail price, what is too low? Remember what the auction's purpose is. What's too low? What's too high? What's fair? Well, in this fractal, this little auction or consolidation, if I find too high, and here's the icebergs, and I got my buying icebergs absorbing here, I know this is important. So I had my sellers here, and I got my buyers here. Who's going to win? Don't know. Not my job. Except I have a trigger. Now, if I get a short trigger in an uptrend, it's not necessarily a reason to get short. It's either a trade management opportunity, but if the trend is up at the moment, nothing to do except hang on to my long. Where's my resistance? It's here. So let's just see what happens. And remember, I'm going for all of this. VPOC migration. This is good for the long. What is VPOC migration? In the TraderLab, you would understand now this is too low. We have mid and VWAP, and we have separation. This is now the new retail price. What does it tell us? Let's look at the language of the market. Remember, I don't use indicators. You know, I'm just sort of doing my thing in the sense of narrating. This is a foreign language. Now, let's remember what happened. Buy sweep, support, counter rotation right here. Outside edge, yesterday's high, location, location. This is like real estate. Right here, I get a sweep. This puts me on alert. I've got liquidity here. I've got yesterday's high, low volume node, absorption. And again, clueless. Let's watch. Absorption. Going to zero, Lewis. But what happens at the outside edge and the location? I'm just showing you how you put pieces together. Now what is going on? I'm here, jaw on the floor with everybody else. I don't know. I have emotional responses. Oh, you're going to get stopped out. You better get out. Does that sound like you? You know why? Because Hyde, the lunatic under the hood, is always in your ear and is very, very clear in hindsight. You should have got out when it broke this. That's a short for you, except the trend's up. Oh, so it's not a short. It's either trade management or suck it up, and you need to hold this or this, that or that. So I get my absorption. I have high volume. Let me show it to you. So what do I know? My sellers are here. There's the sellers. There's the sweep looking for counter rotation back to the high volume node. Outside edge, mean reversion. Let's see. This is the target. This is reversion trading. Outside in is mean reversion. In the TraderLab, this is a long, it's called a continuation mean reversion trade. If the trend is up, you're only taking longs, unless you're a counter trend trader, and for developing traders, forget about that. Now, what was too high? 38-ish, 37. What was this? Let's come back, and again, no clue. This is the previous too high price. VPOC migration, going to the moon, right? What do I get here? A sweep. What did I have there? A sweep. What did I have here? If I'm only doing longs, a long. Scale. Now VPOC migration. Sweep. Now there's two possibilities. And I know, long or short, and you're going to roll your eyes. I understand. Let's look. Sweep says potential for counter rotation. VPOC migration says potential for continuation. What am I supposed to do? Follow my plan. Liquidity? No clue. Watch. Break low. Don't forget this. What is this? If I don't regain, now where's my support again? Let's follow it. Now, again, some of this is advanced and some of this is not appropriate for developing traders. I want to show you, though, how to read it. So what do I know? I know I have a sweep. That's my counter rotation. Where is my add-on? You notice this? This is a potential long to there, and it's very tight, right? I can take this, and then I'm still going for higher. I break below again. This is trouble. Support is here. I had my buyers. My resistance is sitting here, and I am the clueless. Micro high volume structure. I'm taking you into fractals now. And this is just the way to read it, you know? So what do I know? Let's come back to, and I'm showing you structure. Let's look at it. Long, scale, VPOC migration, sweep, warning Will Robinson, counter rotation, support, long to there, looking for out the top, break low, support, rotation. This is mean reversion. That's the mean. In TraderLab, we say, yeah, it's mean. Long, going for what? This. And what else do I see? What is this? How long has it been in the book? What do I see up here? Look at the icebergs. They're executing and they're front running this liquidity. Everybody sees it. Now, when we break here, I am then falling out of this distribution right here. I took a short here. And why would I do that? Well, first of all, it's counter trend, and I'm not saying that's a good idea, but you could use this for trade management. Why? This is support. This is support. So you could be managing from out here or managing from here. You could, well, let's just say you're out. Or you're managing from another location. So now, what do I consider the possibility? I might have found too high, and the longs in this leg and this leg, where are their stops? There. This is a variable high volume node, potential support area. I got to mark it. I didn't do that. Getting sloppy in my old age. A variable high volume node. That's what I call them. I made it up. Who knows what to call it? I started doing this a long, long time ago, and nobody was doing it. Not that it matters. And this is my opening swing, after the sweep. So what do I know about this? I know there's stops under here, so it becomes a target. What else do I know? 70% probability to go here. So what do I do about this? So I can take a short on the break of this, and I come down here and I VPOC migrates. What's the language? Too high. What is this? The new retail price. This is a short. I posted this in the lab. The scale is here. And then I was going for this and one more. This next target and value area low. Okay. Now that was that, so I was on the short side. Now right here, what do we get here? We have a sell sweep here, just showing you. Counter rotation. We come into mid and VWAP. What do we get here? A potential short, mean reversion. This is a reversion trade. Outside in. Currently, for me, the trend shifted in the short time frame down. Then, where are we trying to go? Here, about a 70, well, what is it? Remember the probability, 68%. You got to vet that. Here, next target. And then here, higher time frame target, and this. Now, here I get the sweep. Now, right here, I'm looking at this and I'm going, if I come up here and back here, I need to hold this level for continuation lower. Let's watch it. So I have a runner, and I'm thinking right here, it's wonderful. Make a new low right here. And it's 9 a.m. Central Time, and we have something called the IB30 at 9 a.m. Now, right here, we make a new low right in here. So statistically, there's a high probability of going lower. So my targeting was for this. All right. And right here, and let me tell you another reason for this. This was sitting here. This guy added. So for me, I had alignment. So this was my targeting, and I posted this in TraderLab. And as they say in the business, not so much. I got my buyers, and remember where my resistance is. It's here. The other thing I know is there's stops. So if I can't get here and I'm trailing, I got taken out here. And now I'm in this lower distribution. So if I come out of this, then the potential is to come back the other way. So let's just see what it does. Now, I got to look again at where I got long in this thing. I was short, and then once I'm off the shorts, I have to wait for a long. So what do I get? Let's look here. I got to look back again. This, don't forget, this was sort of like, this is the dividing line. I get taken out. Now here, if this is too low, this is too low, this is too low, and I'm back above the overnight volume point of control. This is my retail price. If it bumps up, I can take a long here, or I can take a long on a reversion trade. But what this is doing is, let me show you. Let me just bring it back here so you can see it. So when we're here, becomes an outside edge, and this is my resistance because we fell out of here. So this is a low volume area. I can't get on here. I come above here. Now I can, right here, when I break above the variable high volume nodes, and I'm above this, so I'm above this, this is my resistance. So if I get long in any of this, and it's just a trade I take, I'm not saying it's a good trade, I have to scale at these high volume nodes because the possibility is I can just rotate. I don't know, so I just go back to the next node. This is like trading to the VPOC, except it's a fractal. So if I get long here, I'm going there. And then I'm either going to fall back down or I'm going to come up to the next level. And I got this coming in, you see? and the trend is up. VPOC migration. This is another potential add, or you're just hanging out. Doesn't matter. ETH high. And this 50, wherever it was, 50 was my next target. And where's our support? Here. Let's mark it. I think we're going to be caught up, aren't we? So this becomes a support level. VPOC migration. Oh, there we are. Not a recommendation. Let's look at this for a second. How you might use liquidity. And I covered this in the TraderLab. So variable high volume notice here. This is where it was too high. And now we found outside edge, no clue. Once this shifts up, then we found too low. So we have down here, which was a ETH too low. ETH shifts. We come outside edge. No way to know until hindsight. So there's nothing here. Once I'm above here, then I'm out of alignment and I have to wait for a structured trade. Once I get long, then that's all I'm doing is longs. Now let me show you some more. So I got to switch some levels on, guys. 1 second, please. How we doing, guys? Ben, come to TraderLab. Those are fair questions. What was the trigger? I am showing you here in the stream, but you should review these streams. And there's a link in the bottom of YouTube for the TraderLab. Anybody who's interested in a professional community built on the business of trading, TraderLab's available. There's no cost for it. Okay, so this is your resistance. I break above it. This is resistance. If I break above it, I can get long here. And this is again advanced. Now let me show you another piece. The IB high, the first hour's high, what was it? The probability. 98% probability to take out either the first hour's high or low. Given the trend, other than counter rotation trading, or what's called responsive selling to take stops out for liquidity grabs, north. What else do we know? ETH high or low, 98% probability. What else do we know? The previous value area high or low had an 89% probability. Failed to get there, right? What does that tell us? Too low, out of balance, longs. So all you got is longs, other than if you were a responsive seller, which I trade both sides, doesn't mean anybody should. The idea in the TraderLab is that you only stay in alignment with the dominant side. You're not here to be a whirling dervish. You need to become sustainable and deal with your fear and stay with the dominant side, or what I call the advancing army. If you start trading both sides, you're probably not going to be sustainable. So this right here is resistance. Where do I come? I come outside, and where's my HVN? It's here. This was resistance, wasn't it? What happens to resistance for this astute group of traders? That's resistance. This is support. This is a advanced process. You could get long here, and you got to clear this, but the trend is up, right? And what else at 9:30? The IB stat, over 98%, over 98%-ish. Why wouldn't I get long? Now, let's keep going. And where's support, you ask? Let's look. Here. 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 Absorption. Now, this is advanced, not saying anybody should do this. But where are we? We're above this, and we're above this, and we got resting liquidity at 50. Actually, we got it right here. This was my last trade. There's your support. And whether or not you do this is up to you. It has to be vetted. VPOC migration, going to the moon, right? What does it say? Too low. Let's mark it. I'm in Fractal, so this might make you nutty. I'm trading what you guys call multiple time frames. That's all. Not a big deal, except this is not regulated by time. It's regulated by participant behavior. One moment. I didn't get my levels turned on. I got to do that. 1 second, guys. This is Investor RT. It exports levels. And it keeps in real time. So you'll see these levels come in. It's going to outline the distribution. That's all I need, because what it tells me is a story. This is the retail price in this auction. These are all fractals. So I know out here is a low volume node. If I rotate out here, which is in alignment with this and this outside edge, it's a long for me, not a recommendation. I mean, if things fall apart, not so much. And then this is called mean reversion. That's the mean. So it would be outside in, and then helmet. And what else do we have? We have one more target up here. The ETH all-time high. Clueless. Not my job. I just trade and manage my trade. And I'm not smart enough to know what the market will do. I'm not a predictor. I'm a follower. I follow the auction only because I can't predict. I stopped trying to predict a long time ago. When I first started in the business, I learned what's called classical bar charting. Indicators were brand new. So indicators were pretty exciting because the line crosses and you think, oh, look at that, you know? So you think that's the answer. It's actually the problem, but we don't know it because of the random outcome of anything. This is as random as anything else, except if you trade with an edge, it's still random. And if you look for confirmation, right? That's the term you use, right? To avoid risk. Is the outcome of your trade any different than mine? No, it's still random, except when you're waiting for confirmation, typically you're not entering at an advantageous location. You are entering late. You have more risk, and your outcome is no different than mine, except I only trade when I have an edge. And with random inputs, I'm going to suggest there's an old saying from early computerdom. You might recall this, depending how long you've been on the planet. Garbage in, garbage out. And for me, indicators were garbage. And again, it wasn't because I didn't have winning trades. I built trading systems built on those concepts because I thought optimization would be the answer, get everything in alignment. But you can't fit the market in a box. You really need to be aligned with the market, not predict what it's going to do or, because prediction is an attempt to avoid risk, isn't it? So if you can't avoid risk in this or randomness in the environment, then you can't solve for it. And that's what we do in TraderLab. In TraderLab, we're solving for randomness. We're not solving for confirmation or predictability. What's the high of the day going to be? Well, when I learned classical bar charting, it was all measured moves. I thought the business was prediction. Oh, it's going to do this. It's going to do that. Oh, I got a flagpole on a flag. Oh, here's the measured move. Here's a head and shoulders. Oh, there's the neckline. Oh, let's go to Fibonacci. That's very predictive sometimes. Or Elliott wave. Keep going. Darvis boxes, pitchforks. I can't even remember. It doesn't matter. What it matters is they all worked and they all did not have an edge because you don't use them in a vacuum, right? You put them together with other things, and whether you're drawing a little line or using a moving average, everything works. But if you don't have an edge, you're still going to lose, and you'll still not have a sustainable business. So that's the question. So let's watch the behavior here. You'll notice now this is the high volume node. The outside edge is at the IB out here. There's a couple of possibilities here. Continuation trades can show up out here or even here. For me, if not long, I have no trade. This would be the last long. And then working on my crochet. You guys have questions? The idea of TraderLab, it's not frequency of trading. I find, at least for me, and this is just a personal thing, not a recommendation, that I need the range to pay for the stops I will take. I take them every day. I don't, other than my personal emotional response, disappointment, which who wouldn't have that? It's just a sample. I'm sampling a location based on my edge, and it's random. My goal is to get risk neutral. So I have a free trade, and either I get risk neutral, or I take a stop. If I take a stop, let's say I got long here. There's absorption. I take a stop. What am I going to do now? Well, maybe I'll put the trade right back on again. And then I, have choice words for whomever, the randomness, and I just put the trade on and do whatever. Okay, we have a sweep. We're making new highs. This is a 1.5 times the first hour high. So half of the range from first hour high low. Since we're kind of out in Twinkie land here, there's nothing. Once you get outside where there isn't really previous structure, you're kind of like out there, and you're basically just monitoring and managing. This is the next level. Not a recommendation. We might take it out. We might not get there. It's not my job. My job is to manage my trade. So that's all I got. You guys have questions? This is TraderLab. You can learn this, but it is not plug and play. Anyone who thinks this is plug and play is naive and misdirected. And it's okay. We're all naive. We're all misdirected. We all think it's a basket of indicators, and then we're going to have an ATM in the basement. I'm going to ask, how's that working out for you? And if it is working out for you, come to TraderLab, clue us in. I'm sure we'd like that also. But most of us, I would say all of us, have been there, done that. And then, what's important also? What works and why doesn't something work, even though it's random? I coined a term called Trader Groundhog Day. Working hard, waking up in the same place. And I always thought, well, look, I have winning trades. Let me just make it better. It's so logical. But if you have a defective process, you're going to wake up in the same place. And I hope that makes sense to you. Does it make sense? Java, come to TraderLab. The link is in the bottom of YouTube. And there's no cost for TraderLab. It's in the Bookmap Discord server. There's a lot of additional education in there also. Stocks, options, crypto, OrderFlow with a high-tier tool like Bookmap. Of course, what I do has a very large participant mass, you might say, of traders. And the idea of the TraderLab is to leverage the collective experience of the group. There's not one way to trade, And there's data mining going on. A lot of the statistics you hear, and there's a lot more, by the way. Discussion of structured trades. I don't call them setups because that's mechanical. And a structured trade is built on top of a chassis. And I always talk about this chassis, which is the profile, because the profile is measuring participant behavior. If this is the retail price, we can come back to it if we find too high, or if we haven't found too high, we're just going to keep motoring until we do. And we will. When we find too high, then the buyers who are in this are going to take profits and get pushed out. And then we counter rotate. It's the way the market works. Now, I don't know where the high of anything is. It's not my job. What I do know is the market always rotates because that's how it works. It rotates up. It counter rotates. Now the trend is up. So far, what we're doing is we're getting absorption in the buyers. Now here's a sweep. What is the behavior at the sweep? The link in the bottom of YouTube will take you to TraderLab, but you got to confirm your Discord username. And if you don't have one, go get one. There's no cost again here. And I just want to say it's a community of traders. It's a substantial full-time community. I'm in there, and there's a lot of really good traders in TraderLab, and there's a lot of developing traders. Now, I have to say something to you about a developing trader. I'm a developing trader because I watch these streams every day. I go back like everybody else, hopefully, and do screenshots. I'm always looking to improve. Nobody has a monopoly on, there's no perfection. We're in a random environment. How do you measure yourself in this environment? Well, first of all, you only trade when you have an edge. So that puts the odds on your side. In a random environment, you're going to have winners and losers. Some days you're going to have losers. It doesn't matter. You're not in alignment. Other days you're going to lose control of yourself. And the lunatic is going to take control. Fear, impulses, fight and flight, FOMO. We're all subject to those impulses. It takes practice to recognize impulse, understand where it comes from, and allow it to happen, but not respond to it. Recognize how you feel. Understand where it comes from. And in this business, it's natural because you're wired for it, and chemicals are released in your brain. And those chemicals can and will overwhelm your intent. So you may intend not to bail out and not to move your stop. Then why do you do it? And by the way, raise your hand if you don't do it. Nobody is raising their hand, at least I'm not. So I had to understand myself. And for a long time, I thought it was sticky notes, willpower, and I put it in my trade plan not to bail out. And I still did it. And it was really, why am I doing this? Why can't I, And it was very disconcerting. And it made me question if could I do it? But what I really had to do is do a deep dive on hormones and primal wiring, which I really didn't understand, because we base what we do on our external world experience. We look for approval from parents. We look for approval in school. We need to be somewhat aggressive to be successful in our chosen fields. So a lot of those things, we bring all that here because that's our experience. But what happens if those elements are actually the reason for potential failure? Then we have to become familiar with those elements and find out why they might not fit, you see. And the way to do that is to kind of operate like a casino with random outcomes and just take trades with edge. That's the answer. And in spite of how you feel, which is fear, the lunatic, I call him Hyde, Jekyll and Hyde, despite those impulses, and that's exactly what it is, a primal impulse underneath your conscious mind. You need to acknowledge them, understand where they come from, and dampen your response. Understand it's not in your self-interest. Also, the critical self, the one that's, let's say this is the reversal and the thing goes down and you get stopped out down here and you give a lot of MFE back. What is the Hyde going to say to you in hindsight? You should have got out. What is that should have got out? That is, well, first of all, hindsight. But next time, what are you going to do? Be listening to Hyde. So you cannot respond randomly. The market's random. In a business of trading, you need to know what you will do before it happens, not what the market will do. You cannot know that. You need to bring your plan, which is vetted, to market and then align with your plan. And if the condition of the market changes, you've got to turn the barge around. And for me, it's not fast, because when I define context and it transitions, I'm out of alignment. And then that's okay, because I have the confidence. I know where my next trades will show up if they do. And if they don't, I may not take another trade. And that's okay, because I'm following my plan. But I also have structured trades, and I anticipate at some point they'll show up. And either they will or they won't. And I have to look at this not from a point of FOMO, but from a point of consistent application of a plan, because that's my measure, not my profitability. Profitability is the output of following a plan that has a statistical edge. We got to watch this here. Now, what is your plan telling you here? Is this an exit? Is this nothing? How are you managing your trade? Where were the buyers? Where's the outside edge? Where's your next trade? Now, if you don't have that answer, then you're just hanging out. And you have a process for trade management. Your job is not to catch the whole thing. Your job is just to follow your plan. I never get all of it because I don't know where the high of anything is, right? Do you? So my job is not to be concerned with that. My job is to take my trades when they show up, manage them, and accept the random outcome. You see why this is long here, by the way? Now, again, I'm going into some advanced stuff. And if you don't have an edge with the more primal stuff I share, then you'll get abused. There's more to this. VPOC migration, outside edge, resistance becomes what? Break high, VPOC migration. This is a long absorption, continuation. Now, that's advanced. And what else? All-time high. What is a high? Isn't that high the same as this high, which was what? The test and a long to there, break here, potential long here to there, break, test, long, swing, support is here now, outside edge, microstructure. No reason not to be long, and it's not a recommendation. You should be following your plan. Now, if you don't have a plan, that's okay. But why not? I can't make it up because I have to know what I'm going to do before the market opens. That's what I know. I can't know what this is. Now, right here, I have a sweep. That suggests a counter rotation. If I don't get it, what did I get here? A sweep. That's my counter rotation. If I'm sitting in the market and I see this and I have this liquidity right here, it is resistance. Whoa, come back here. Sorry. Getting carried away, literally. Let me show you. This is all a similar process you're seeing, right? Right? Now, these are order flow triggers. They're advanced. You don't need them. I kind of look at them like here. Say, order flow trigger. What's this? Resistance. Break low. VPOC migration. Break high. Order flow trigger. What's this? Resistance. Order flow trigger. This says counter rotation. I'm just showing you structure. It doesn't mean you get long here because we are going to get a counter rotation. And where are the stops? They're in, each leg has stops. And at some point, we're going to take them because the market is long. Remember, write this down. The market goes up to go down. Market goes down to go up. It rotates. This is rotational trading and structured trades. Market goes up to go down. The market goes down to go up. The market goes up, and all this is absorption, resistance to go down, support, absorption. The market goes down to go up, resistance. The market, and here's your sweep. We got to be very careful here. The market goes up, support, now to go down. We hold this, and we're looking over here. It's just chunk by chunk by chunk, not recommendations. Are you guys following? Chava, come to the TraderLab. There's a library of webinars, the TraderLab community. There's a lot of members in the TraderLab. I started the TraderLab many years ago. I guess it's gone on 4 years or 5. I don't remember. My Primal webinar has about 34,000 views. You might want to check it out. And then the library. Let me show you the TraderLab. Just take a peek. So this is the TraderLab community. You'll see there's a lot going on in here, a lot of interaction from the participants, charts, questions, why did you do this, or why don't you do that, or what does it mean? Prior to the RTH Open, I did a lot of posts. We have NQ traders, gold traders, crude traders. ES is the primary product I trade, only because of the depth, and so traders don't get skidded. The thing about like NQ, NQ is it's thin, so it has higher risk. Remember, there's our sweep, and here's our potential area to observe. Outside edge. Remember, the market is long, so this is an outside edge. Micro low volume structure. High volume is here. This acts like a potential VPOC, so that it potentially can be outside to here. We'll see what it does. It's not a trade recommendation. Let's just check it out together. So anyway, this is TraderLab, and there's a lot going on in here. I appreciate everybody who participates. The way you get more out of this is not by worrying about your ego. Everybody in chats is worried about how they look. That's a problem right there. That's hide. How do I look? Well, I don't want to look like I don't know. Guess how you learn? Become the squeaky wheel. Ask the questions. If you can't ask the questions, you already have an impediment. That's all I can tell you. So anyway, this is what's going on. Anyway, I do a lot of posting in here when I can. And when I'm trading, it's a little more challenging. But I do. Here's the Primal webinar. Thanks, Ned, for curating this. Everybody give Ned a hug. Meet the TraderLab. What is this? This is an advanced methodology. Now, the thing I always want to say, advanced doesn't mean complicated. This might be the most simple process because it's based on the fundamental of market mechanics. No indicators. Now, an indicator, as I define it, is your RSIs, your MACDs, and all this stuff. And that doesn't mean you can't use them, but it means if you're mixing indicators and you've got variables, you cannot extract an edge with it. You're just gambling. And if that works for you, keep doing it, of course. The holy grail of trading, how close can you come? This is last Friday's webinar, and I suggest everybody watch this one and stop gambling, start winning. And there's a whole library. And there's many more. There's probably about 700 or so of my streams up in YouTube world. And then there's a library of documents, statistics, structured trade, 60 PDFs, and you need to reverse engineer them. I have kept the advanced stuff pretty much out of here. You don't need it. You can get more advanced and more nuanced if you understand what's going on. But if you don't get the primary processes down, you will not graduate to more advanced processes. You only need one trade. And in TraderLab, I always suggest mean reversion. What is mean reversion? It's trading the rotations. Coming from here to here is a reversion trade. Coming from here to this, from there to there, is a reversion trade. Coming from here to there is a reversion trade in fractals. Now, you shouldn't be taking them. You should be learning to read the market. This is a foreign language, right? And really, what are indicators? They're Google Translate. They're translating some derivative of price. That's a wonderful thing. But let's think about what this is. This is the actual raw input in real time of what's happening. And it's just as random as everything else on an individual interaction. What it is also is if you have an edge, you know where your trade will show up. Why? Because you vetted it, and you also know anytime you take risk, you can take a stop. I'm okay with that, other than my emotional response. But over a large sample size, you understand that it's cost of production and overhead. And you still are going to be emotionally disappointed. That's hide and fine. That's just the way it is. Any reason why you wouldn't be long? let me ask you this. Are you taking shorts? Is it possible that your mind or hide is going, it can't go any higher? I didn't get on the longs. I'm going to be taking shorts. That's FOMO. And that is a way out the door. So it's long continuation trades until it isn't. Has anyone currently, as you're following this narrative, seen shorts? Now, you might see a trade management process subject to your plan, but would you be fading this? Just asking. How you guys doing in YouTube? You getting something out of this? Well, GH, you're asking me my win rate. What I do is part of what I share in the TraderLab. And then also what I do is more advanced. So I take trades other traders should not take. It doesn't matter because I trade both sides. I trade counter trend. I do other elements. But I'll tell you that the most important metric for all traders is the probability of any structured trade, no matter what it is, how you define it, to get risk neutral. That's the most important part is risk management. So any trade you do, you need better than a 50% scale rate to get risk neutral, and then you manage your runner per a vetted plan. So like here, where's support? Isn't it here? Here's the sweep. What does it suggest? Counter rotation. What happens if you get above the sweep? And here's this liquidity. Continuation. There's no reason to be fading this. And again, I don't know. I mean, everybody, if you go out in Twinkie world, which is the influencers and everything else, you're going to see everything from a marketing perspective that appeals to hide. The only thing you need, how I made $1 bazillion, and this is the one thing. It's nonsense. Now, maybe it isn't, but most of what's out there is garbage. But you don't need to take my word for it. You just have to take your results. And I mean you, I'm talking the collective you, not anybody specifically. We've all done it. We all buy books or go to seminars or join a chat room. What we're all looking to improve. It's got to resonate with you. But the thing that most traders don't do is vet or know where their edge is and then have the discipline to wait for the trade. Now, if you don't have a trade here, your job is not to trade. Your job, how do you measure yourself in this business? Ultimately, it's your trade plan. Did I follow my plan? And if I follow my plan and I have a losing day, is that a successful day? Yeah, it is. Because success in this business is not P&L. P&L is the outcome of following a plan with an edge. It's not the other way around. Okay? So you need a plan. That means you got to take the time, again, collectively, to actually learn what's going on, what the context is. That's the number one piece. What's the context? I think we can agree it's up. So are you going to take trades? Short? Me? Not so much. What happens if the tweet comes out and this does the Acapulco cliff dive and now I'm not short? Well, I'll get taken out of my long. If I get a short for that fits my plan, I will take a short. If I don't have a short, I'll just sit here with you with my jaw on the desk and go, wow, what happened? It's not my trade. Doesn't matter. That's just the way I think about it. FOMO in impulse trading, which is FOMO, is hide. In other words, think about how your dog works. You guys who have dogs, and the dog sees a squirrel or even a pigeon, and the pigeon or the squirrel runs away. What does the dog do? Chases. It's a primal response, a hunting response. When the market's running from us, we're having a similar response. We have to gather food to bring back to the cave for survival of the species. That's hide. That's the primal wiring, you see. The other side of the primal wiring is we're fearful at the same time because what's behind the rock? we don't want the saber-toothed tiger or some apex predator eating us for dinner. So there's a built-in conflict of FOMO and fear, right? So they're contradictory emotional responses. So we cannot respond to FOMO and anticipate we're going to be in the business, and we cannot let fear manage us. So the only thing I've found is if you don't have tangible metrics, that's what the vetting process is, all you have is emotional stimulus. So either you're running the business or the lunatic under the hood is running your business. Who do you think you want to have in charge? You or the lunatic? Which one do you think might create sustainability? Nobody has a winning rate of 70%. If you do, I'll write you a check. Come to TraderLab. What I do, it's not a win rate. It's risk reward. I've talked about this a lot in the TraderLab. I don't take a lot of trades. Now, in a day like this, there's a lot of opportunity. Most days, 3, 4, I trade range because that's how I get paid. I don't take a lot of trades. Why would I put a lot of risk on? Every time I take a trade, I'm taking risk. So do I want more risk or more range? Me, range. I used to be a high volume trader many years ago, and I had to make a decision to get a membership to lower my cost or change. And I'm early on, there was no day trading, so it was swing trading and trend following, positions. So that doesn't exist for me anymore. I'm sleeping better at night because I don't hold positions. So instead, intraday, I'm positioning for the larger rotation. So no, I don't have a high win rate. I have a high risk reward ratio. You don't need, you could have a 30% win rate. And if your risk reward is there, you're going to be a profitable trader. I hope you know the difference. And if you don't, you might want to come to TraderLab. Does that make sense? Please give a like if you're getting something from this. It encourages me to keep doing this. There's no cost for TraderLab. There's a lot of resources. It's a professional community, so if you're interested in the Holy Grail, it doesn't exist, but there are processes and an understanding of the business you're trying to be in, and even then, there's never a guarantee that you'll actually be willing to do the work it takes to create a business. The first thing, if you come to TraderLab, is to watch the webinars, follow the streams, ask questions, be patient, and use one structured trade to vet, and that's mean reversion. Mean reversion is the most common behavior, and that's because the market's always rotational, and these are reversion trades. So what we're doing is we're reverting, and what's going on here is as we're moving higher, these are auctions. Too low, too high, retail, high volume node. If I'm up here, too high, too low, high volume node, retail. If I fall under, I can come back here, or I can come back here, or all the way down here. It doesn't matter. So this is the auction. Where's my indicator? I don't have one. Why? Useless for me. So I hope I answered your question, GH, about a 70% win rate. Doesn't happen. Well, GH, I don't manage money anymore. I did for many years, and it's no longer my interest. I just trade my own account, and I'm perfectly okay with that. And I'm not compulsed, I'm just very relaxed about this, other than my emotions, which are never relaxed, but I just take the trades. I don't know, If anybody asks me, what do you know? I'm going to say the best I know is I don't know, and the outcome of any trade is random. That is trading. So that's about it. But no, I don't manage money. I'm not interested in it. It's the last thing I want to do. Been there, done that. Did it for many years, and it just isn't worth the trouble. In fact, who cares? I figure if somebody has equity and they should learn the trade, or go to a CTA who has a good track record and, write out a check to them. Otherwise, I don't know why you're in the stream, really, But if you want to learn how to trade and maybe do this for yourself, and you're willing to put the time and the work in, and this is substantial work because there's no plug and play. And many retail traders are mechanical. I understand that. We all start out mechanical. Sell the mid, buy the mid. Well, if the market's in rotational trade, the mid doesn't exist. It's just a line on the chart. Sometimes we can use it. Other times we can't. What's the difference? If you don't know, and I mean you, again, I'm not talking about you, I'm saying the collective you out there, then you don't understand market mechanics or how to use specific structured trades. And if you guys are visiting in YouTube, if you've been following this, and you should come to the TraderLab just to follow and look at some of these webinars that I've done. And again, no holy grail. Wouldn't we all like to have plug and play? Wouldn't it? I mean, this is what retail traders think. They think it's indicators and get the right mix, and now the ATM gets moved into the basement. Guys, please, let's stay real here. Why do a high percentage, and the rumor is 90% or whatever, fail in this business? I'm going to suggest they're all doing the same thing. Now, if they are failing and you're doing what they do, what are you going to do about it? The way I kind of perceive it is you have a lot of experience and trapped equity. What is the equity? The dollars you may have burned and the equity you may have thrown out the window. I don't know. You know. And it's trapped. So how might you get a yield on that experience? Well, one is, are you going to keep doing the same thing? So you're going to trap some more equity and time, perhaps, and none of us have unlimited time or unlimited equity to work with. But you can learn from it. You can learn what not to do on one hand, and the other part is your behavior is the same as every other retail trader. That becomes an asset. It's not a liability, but your equity is trapped. So if you can look at it that way, now you can glean retail trader behavior. Where are their stops? Here, and we can rotate down because the market is long. And what do we know? We got support here, we got support here, and these aren't trade recommendations. They're outside edges, low volume nodes. There it is. Where's the stops? Under this swing and under here. This is easy pickings. Is that where you put your stop? Easy pickings. Do you think that might give you something to better understand retail trader behavior? And if that's what you do, can you create an asset out of that? Anyway, I'm out of time. Please give a like on the way out. I appreciate you spending some time today in the TraderLab. If you're interested, use the link in the bottom of YouTube. You can visit the TraderLab. There's no cost. And as long as I'm doing this, and it's not going to be indefinitely, I can assure you of that, you're all welcome to visit the lab. A great community. And again, it's about the business of trading, and it is not romper room. So thanks again, guys. Thanks for visiting with me. I look forward to meeting you in the TraderLab and appreciate your time and interest. Hope you got something out of this. Thanks again.